You've been following the real estate market at all, you know now is a great time to refinance.
Absolutely. And joining us now from American Eagle Financial Credit Union is Howard Brady. He is the Senior Vice President and Chief Lending Officer. Welcome. Thank you so much for being here.
Thank you, Karen, Scott. It's a pleasure to be here. Thanks for having me.
I said this during one of the teases, I get giddy at the thought of refinancing, and if there's an opportunity for me to do it, I want in. Can you tell us why now is such a good time to refinance?
Yeah, Scott, it's a great question, and we feel this from our membership all the time. And I think we'd agree the last 12 months have been pretty chaotic and pretty interesting. The silver lining in here for consumers is that the rate environment as a result of the pandemic is very favorable to refinance. And not only that, a lot of money has flowed into Connecticut in the housing market and really solidified values. Those two things combined have really enabled the marketplace and consumers to pull money out of their house for home improvement, for example, or for education costs, or very simply lowering their mortgage payment on a monthly basis, or probably most importantly, decreasing that finance cost across the term. It's a pretty powerful combination.
Yeah, and give us some examples. Like, how do you know if it's right for you?
Right.
Well, there are a number of things that you can look at. And what I would say to that is that benefit is in the eye of the beholder. Every single family situation is different. And that's where American Eagle comes in and where we come in to really try to understand a borrower's situation and be able to guide them appropriately. I'd be happy to walk you through an example if you think it would be useful to your viewers.
100%. What do you got?
So if we take a look, and this is a very real example that came into the credit union last week, just so you know. So it's a loan of $192,000 and the interest rate's 3.5%. The corresponding payment to that is $1,027. This borrower has been in their loan for 7 years. They have 23 years left. So that's ultimately what the position was of the borrower when they came in to talk to us.
Okay.
They said, Howard, ultimately, what will this do for us? There are two fundamental options. They have 23 years left. If we cut the term down to 20 years, they still get a great rate at 2.625. The corresponding payment is $1,053. So their payment will go up $26. So that's of $31,000 over the term of that loan. Conversely, if this borrower went into a 30-year deal, their rate is still very attractive at 2.75. Their monthly payment goes to $802. So they can decrease their monthly obligation. Here's the trade-off. They're going to pay $5,000 to $6,000 more over time for that same loan because they've stretched the term from 23 years to 30 years. Here's the overriding point. You want to make sure that as you go into the transaction, not all refinances are created equal. Each scenario is going to dictate which loan is best for each family. And you want somebody really good and with some good expertise to help guide you through the process.
And tell us about the difference of maybe going with a credit union versus some other institution.
I love that question, Kara. So credit unions are different. We're actually a not-for-profit on the banking platform. It's a really unique combination. So what that means for the community and the market is that they are at the center of every single decision that we make related to what are the products that we're going to offer, about service delivery. To your point, what are the rates and fees associated with what we do? And ultimately, we take a lot of pride in enriching our community, and having that set up, being different, a financial cooperative, just puts us in a really strong position to help people out.
Howard, I know you gave us those examples, and I so appreciate that because it really hit home. Is there, like, people always told me, if you're at 3.5, you don't want to refinance unless you're going to lose a whole point, like down to 2.5. Is there any truth to that? You have to wait for that 1 point deduction?
It's hard to get into generalities because every situation is unique. Here's what I'll say. Think about your new loan as an investment. There are going to be closing costs associated with it. Right. So that example that I gave you, the current balance is $192,000. If that person refis with us, their new balance is going to start at $196,500. So there's an investment to go into the process to get the return.
Okay.
One part of that is the interest rate, but the other part of that is how long you stretch out the term. So it's not as easy as saying 1% off, but that's a decent rule to get the conversation started, Scott, if that makes sense.
It totally does make sense. And
well, because in that instance, that was still real money to save without being a full point.
Exactly.
But I guess it really can depend. And sometimes if you have equity, you might want to take some of that high interest loan and wrap it in so that you can refinance maybe and get tax deductible interest instead, right? Whole nother conversation.
Yeah, and that's a great point, Kara. You definitely want to consult a tax advisor on that. But the benefits, it's multifaceted associated with a refinance. And I think we've done a decent job of giving the viewers an understanding that it can be a complex scenario, but our job at American Eagle is to make it easy for you. And we'd be happy to consult with any of your viewers that would want to explore that.
Thank you so much, Howard. We appreciate your time. Great information.
Well, it's my pleasure. Thank you.
And the rates are so super
Oh,
low.
my God,
So if you want more information, they can help you in your individual situation. Go to www.americaneagle.org or even find them on Facebook at American Eagle FCU or follow the credit union on Instagram and Twitter, AEFCU. You can find them right there too.